Now, while the East African region currently sources about $30 billion from domestic taxes, it has a development financing gap of about $25 billion. Today, China Exim Bank has addressed much of this need at the government-to-government level, and opportunities are opening up for private infrastructure investors. We had a conversation with Patrick Mweheire, Chief Executive for Stanbic Bank of Uganda, for more.
2018 was a really good year for Stanbic Uganda. We're able to demonstrate both top-line growth, roughly under 5% on a revenue top-line growth, and double-digit PAT. We generated a PAT of $215 billion. 215 billion shillings for 2018, and maintained, the dominant market share in both loans and advances, deposits, and also profit after tax in the Ugandan sector. So we remain the leading bank in the country. And even this year, things are looking up. I think 2019 is going to be even a better year than 2018. So we're looking forward to it.
Yes. Now, what would you attribute the good performance?
Well, the performance has really been listening to our customers. If you look at our growth in the loan book last year, we grew a lot faster than the market. We grew our loan book close to 20% year on year. And that means that we actually took market share. So we're able to demonstrate the pockets of demand for credit in the industry, and we were able to kind of support the right clients. We also managed risk. We brought our NPLs down to almost 0.2%, really low for the market and for the sector, actually, in the region. So managing risk proactively and supporting the right clients, growing the loan book, and also keeping an eye on costs. We're able to reduce costs year on year. And you put all that together, that kind of sums up why we had a good performance.
Yes, and when we look at doing business here in the East African region, what are some of the perceived challenges and what are the opportunities?
So in the East African region, I think just to start with the opportunities, I think this is a region that has shown a lot of resilience. If you look at the key major East African economies with Kenya, Uganda, and Tanzania all growing north of 6.5%, I believe Rwanda is north of 7%. This is one of the fastest growing regions in the continent. On top of that, there's a lot of connectivity around this region. We trade amongst each other, almost 30% internal trade within the region, which again is one of the highest in the continent. There's a lot of infrastructure spend that's going on in all the countries to increase the connectivity in the region. And then on top of all of that, there's a major oil and gas play that's happening across Tanzania, Kenya, and Uganda, which I believe is going to provide a catalyst for growth for the next 5 to 10 years. And that trickle-down effect is going to affect other industries, whether it's consumer, agriculture, real estate. So I'm quite optimistic and really looking forward to the next few years for the region. In fact, our own internal estimates show that we're going to grow our GDP collectively from roughly 200 billion now to almost 400 billion in the next 5 years. And all those numbers are quite obvious when you scale down and look at the very, very positive dynamics of each of the individual countries. So it's a good time to be in East Africa. And I also like the fact that the policy on the policy side, the governments are all very open to do business. They all seem very friendly about attracting foreign capital. And they're allowing a lot of the liberalized policies that allow this investment to come into the country and to stay.
Yes.
So it's a very attractive at the moment.
Yeah, you've mentioned on how attractive the East African region is. You've mentioned on the growth opportunities, and we've also seen that according to the African Development Bank Regional Economic Outlook of 2019, East Africa is leading on the continent with a growth estimated of about 5.7%. But when we look at the region, we also see that we have political tensions, we have trade barriers. Won't this lead to a decline?
I think the net positive, I mean, in every region, there's always going to be challenges. The reality is that the net positive here is that we see a lot more opportunity and we see challenges. But also, if you look at some of the challenges, there are some real action points to address them. Whether it's trade barriers, if you look at some of the one-stop border posts that have been put in place amongst the countries to allow and to ease the flow of trade between the countries. I know there's some debate about SGR, about the region, but It's clear that there's a lot of infrastructure spend that's happening, whether it's in Tanzania with Tanga, a new port, whether it's the railway lines between Tanzania, Uganda, Rwanda. There's a lot of collective will, both politically, to make sure that whatever challenges they are, given our financial constraints, that we're able to do them. If you look across these countries, they're all spending 25 to 30% of their GDP in infrastructure, which is significant. So they all acknowledge their power challenges, their transport challenges, but they're dealing with them. And that, to me, is what gives me a lot of optimism.
Yes, and earlier on you had touched a bit on policies. Now, do you think that the policies here in the domestic policies in some of the countries in East Africa, do you find them friendly? And are they attracting investors into the region?
Absolutely. If you look at 2018, all three countries, Uganda, Tanzania, and Kenya, attracted more than $1 billion of FDI. And that is a huge vote of confidence. Those are foreign entities saying, this is where we want to put our money. And that, I think, it doesn't need to be defended. I mean, there's a lot of good projects elsewhere in the world. I think all this smart money evaluates and decides that, this is a region that we want to put our money in. And there are reasons for that. They feel quite comfortable with the liberalization of the capital account. You can bring capital in, take capital out. These are freely floated exchange rates. Reasonably independent central banks across the region that are really tasked to using monetary policy tools without any interference politically. And we've seen that. We've seen Uganda dramatically increase its central bank rate. Tanzania has done the same. So all these are encouraging. And if you look across the continent elsewhere, there's some challenges with moving money in and out of these countries. So East Africa continues to demonstrate that we are open for business. We do need foreign capital because we have huge aspirations to grow our economies. And we're going to treat all these investors with exactly the right treatment that they need to keep coming. Yeah.
Yes, and as you said, East Africa does really need foreign capital. Now, we've seen that also the financing gap here in the region is, the gap is really increasing, and we need about $25 billion in order for the East African projects that are currently underway to be completed. Now, how can this be narrowed, and what is the role that Stanbic Bank Uganda is playing in this?
So this is one of the things that we were discussing at our recently concluded East African Summit in South Africa just 2 days ago, which is, if you look at the last decade, the financing gap has largely been met by the Chinese. But as we move forward, I think there is obviously certain ceilings as well on the China state-to-state lending machinery. Much of that is beginning to tap out. So we need to start looking at other sources of funding and open up other non-traditional sources of funding for these projects. One of the areas that looks really exciting and promising is the PPP concept, private-public partnership, where we can ring-fence some of these projects, particularly the ones that have cash flow generating capability, and then look at a private or commercial solution to some of that funding. I think the governments in the East Africa region need to move away from, largely dependent on state-to-state funding and start allowing the private sector to fill some of these roles by providing accommodative policies and structures to allow these PPPs, for example, to take place, and also allow for much, much longer tenor financing to come into the country. Because that's the other area that we see, is you have great projects, but they can't be funded with bank financing because it's really 8-year money. Some of these projects need 15, 20-year money. So how do we work with the governments to kind of increase that tenor so that these projects are more viable? So these are the type of the things that we need to start discussing, because we cannot scale back our aspirations. We still need to get that $50 billion of projects funded. If we have limited domestic resources and tax collections that we have, that funding gap has to be filled with foreign capital. So what do we need to do to make that foreign capital flow? And also kind of subsidize what's traditionally been Chinese lending. So these are the things that we need to be talking about.